Welcome back onto Corporate Conversations. Now the management of EPACK Durables is joining in. Ajay Singhania, the Managing Director and CEO of the company, is joining in to talk about the road ahead for the company. Mr. Singhania, good afternoon. Thank you so much for joining in. Well, we sitting here in Mumbai are definitely feeling the heat even before the month of March has set in. Has that reflected in your demand trend so far for the air conditioners? What is the trend that you are picking up on ground, and do you see this intensifying further as you go into the peak summer months?
Yeah, so good afternoon. And we never saw the heat wave actually subsiding during the whole of last 12 months. So yes, the momentum continues and it started picking up already with a very sound order book, and further the demand is kept on increasing. So I mean, we're heading on for an extremely good summer season again, it seems.
All right. So what does that mean in terms of numbers? If you could give us a sense, what did you do last summer? How much higher have the orders been for this summer? And are these orders for ODM products or OEM products? Are they margin accretive for a business like yours?
So the entire year, if you look at the calendar year, definitely the industry grew at something like 40% plus, and at EPAC we grew at around 75% in terms of the overall revenue. So the momentum continues. The industry seems to be looking at, again, a repeat like 20-25% growth for this calendar year as well. And at EPAC, we are definitely geared up to beat the total growth. So, I mean, again, we are looking at 40% plus kind of growth for the calendar year or for the financial year 26, 27, 25, 26 as well. In terms of order book, yes, extremely sound order book. And the last financial year, I mean, 24-25, definitely we are looking at 55% plus kind of a growth, and repeating a similar performance, 40% plus growth for the next year is definitely on the cards.
All right. And what proportion, if I remember correctly, about 2/3 came in from room air conditioners, right? You have been moving into other consumer durables as well, washing machine being one of them. So I just wanted to understand, heat wave does well for your room air conditioner business. What about the other parts of your business?
Yeah, so the significant change compared to the previous year is, although AC is growing at like 30-40% for us as well, but overall the revenue from ACs from 80% has come down to almost 66% in the last quarter. On the year end, we're looking at the dependence on AC to come to a level of, let's say, 70% around. So overall dependence on AC has reduced from 80% to 70%. Our other segments like the component business and the newly launched large appliances like coolers has already picked up, and washing machine is something we are looking to ramp up from Q1 of the next financial year. So all in all, definitely the other levers are firing for us as well. I mean, the component business and the export business, the small appliances and the large appliances all.
So does the AC business in the scheme of things remain at 70%, Mr. Singhania, or as your other businesses grow, that will come down to a more 60-65% sort of a level? That's part one. And part two is, how is inventory management looking like currently? Because there is some issues of demand-supply mismatch over the last few quarters.
So first of all, AC definitely we continue to have a robust growth, but at the same time, the diversification drive we have taken, we believe that the growth in the other sectors will be much more rapidly. So overall, we want to reduce the balance our portfolio in a way that AC comes down to, let's say, around 60% in the next 2 to 3 years. So that's the overall direction we are following, despite growing at 30-40% in AC as well. So that's on one. On the the inventory rationalization, a lot of localization of components have already happened. So that has helped us to reduce our overall inventories. But at the same time, because of the supply chain issues from China, the BIS impact and all that, there is certain mismatch in the industry, but we are well balanced with sufficient inventories of both copper and compressor going forward. So I mean, we are aligned with our order book and we have sufficient inventory in place.
All right. What about coolers? AC is one of the heat beaters. Coolers are the other. Coolers are a lot more mass market. You have production capacity of what, 60-70,000 per month. If you could give us a sense of what your order book out there is, what the realizations per cooler are, and how margin accretive is that business? Because what we're trying to get at is, while AC is growing fast, you have other, businesses which are also ramping up. Capacity utilization will pick up. What are the target margins that one should look at for a business like yours?
So cooler for us is one interesting category we entered in last January. So January 24 is when we entered manufacturing coolers. Last 12 months, we have ramped up cooler production. So starting with like a number of 10,000 per month, today we are almost doing like 45-50,000 coolers every month. So that's the kind of capacity we have currently in place. The interesting thing about cooler is that it's as compared to AC, which has a 6-month manufacturing cycle, cooler almost has a 10-month manufacturing cycle. So that definitely helps us utilize our production capacities and our asset turn, improve our asset turn. Another thing is that on margin side, yes, the margins are almost similar to that of an AC, but at the same time, because the capacity utilization overall improves throughout the year, it helps us improve our asset turn, improve our balance, our cost. So that's definitely one good thing we find about the cooler industry, and it's growing. So for next year onwards, again, we have lots of other OEM getting associated, more products coming to us. So we are looking at ramping up our capacities further.
All right, your guidance for this year is up
There
for
is
you.
no additional investment done. So I mean, the fungibility of our manufacturing capacity is definitely helping us get into.
That's incredible. So, you know, your FY25 guidance is up for the viewers on the screen. 2150 crores in terms of revenue and 7.25 to 7.5% is the margin guidance that you had given us at the end of the third quarter. Now, as things stand for the next year, you believe that you can grow in around that 40% mark when it comes to revenue. What about margins?
Margins will try to maintain at similar levels, EBITDA levels of 7.5 plus minus.
Despite a 40% growth, you do not foresee any improvement in margins, Mr. Singhania? Is it still looking to maintain it, or is this a conservative estimate?
So let's see, improvement is something we're definitely striving for, but when it comes to guidance, I want to be slightly conservative, not give a very... but definitely we're looking to improve further, yeah, surely.
Right, and final question before we let you go. Air fryers will obviously be a very small part of your overall revenue, but how big do you expect this category to be for you, and what's the scalability here?
So air fryer is a very interesting category. It's a localization drive. So it's something which is getting shifted from import to local. And definitely we are looking to ramp up capacities from 50,000 per month to almost 100,000 per month in the next 3 to 4 months. So manufacturing 1 million air fryers in next calendar year, that is 26, is definitely on the cards. And from revenue side, I mean, it's like 200 plus crores, at least in next year, is the kind of revenue guidance we can have on the air fryer alone.
How much does an air fryer sell for typically from a business like yours?
So an ASP of 2,000 is something for us, and then the markets, it's like 3,500 to 4,000 is the market MOP.
Okay, so that's how you come to the 200 crore mark, which is 2,000 rupees for 1 million pieces. Okay, thank you so much for joining in and giving us all those data points for analysts to ponder over for the next couple of years. We will most definitely keep track of the temperatures and your sales in conjunction with those temperatures as well. With that, take a short break, come back, talk about the markets. Aditya Agarwala of Invest for Edu joins in with some trading strategies.